Dave Ramsey is absolutely pissed this week. Did you see the 50-year mortgage just dropped?
He's in the ICU.
He's in the ICU on his deathbed over the 50-year mortgage. But let's get into it. What is the pros of having a 50-year versus a 30-year mortgage? Does this actually change affordability? Does it do what the Fed says that it will? Or is it just putting a Band-Aid and delaying the problem?
Such a great question and very timely. So I think I just was researching. Fannie Mae hasn't released it yet. So I don't want people to think like, oh, Roots is saying I can get a 50-year mortgage. You can't, but it's potentially coming. Trump's putting a lot of pressure. Yeah, let's get into it. Like objectively, what are the pros and cons? I mean, pros, breaking it down, it's easier to qualify for a mortgage. Right. So all these first-time home buyers complaining, I don't make the income to buy a median home because they're 7 times the amount of my income level is what homes cost nowadays. They used to be 2x. This will help. It's just how much will it help, right? Is that $200 a month that you're going to save worth it? I think the interesting pro is actually mostly from the investor angle. And hear me out. If you want to cash flow, it is very hard on a 30-year mortgage with a 7% rate. On a 50-year mortgage, it's kind of like those interest-only loans. I almost got an interest-only loan once because my cash flow was going to be like way better. And I was like, well, I'm barely paying the principal down anyways.
Right.
I might refinance later. So the 50-year mortgage, like being a quick cash flow play to then bridge into refinancing later into a 15-year or 30-year mortgage, deserves legitimate merit. Yeah. I do believe.
So it's an affordability thing. You can actually get pre-approved for the mortgage because you the loan would be much longer out. So the monthly payment is actually
compressed,
affordable to people's W-2 income or whatever. Maybe for that would be a pro for a first-time home buyer. For an investor, having cash flow because you're not paying, you're not just paying as much principal, right? You are paying wildly more interest over the lifetime of the loan, but it is spaced out. The principal is spaced out over a lot.
It's pretty much what's happening. Right. You're going from like on an average loan, maybe you're paying $250 a month in principal. Now you're paying $50. There's your margin.
Mortgages used to be under $1,000 was because you always were only paying like $100 of that to the principal, but the interest was much smaller. Right. Now what's happened is there's $1,500 in interest, and you're still only paying like $100. Right. The principal hasn't changed. The principle of the matter has not changed.
Literally.
And this just extends it out to make that monthly a little bit. I want to see the actual numbers though.
Yeah.
Okay. So
break it down.
I pulled it up. It's on mortgagecalculator.org. Just super simple. Put an equation in a 500K home, 5% down, like insured conventional, some PMI, 6% interest rate for 50 years. Your monthly payment with PMI, no taxes and insurance, is $26,983 $2,700. Straight comparison, apples to apples, you're looking at $2,847. So like, $2,800 or $2,850. That's not a ton of savings.
$150.
It's not a ton of savings. $150 a month.
Is it worth it?
Is it worth it? This is what actually blew me out of my chair though. This one number. $550,000 in interest paid of the life of the loan across 30 years, or $1 million.
That's
$1 million.
So double.
So I see what you're saying when you're an investor trying to break in and you're looking at the calculations going, oh, I'm going to break even on this single family home. Now I'm going to actually have some reserves and cash flow coming in of $200 to $300 a month because of the savings.
Right.
I get it.
Right.
Notable. What's the strategy that can win though? Because I'm struggling to see the strategy.
Hear me out. I don't think the strategy is necessarily to use one. We had a great episode about ranking the 5 profit centers of, real estate, like appreciation, principal pay down, inflation hedging. You should go listen to that. But I think principal pay down was like our number 2. So basically, if you want to put cash flow on a pedestal and just focus on cash flow, which I don't think you should, then you're basically sacrificing the principal pay down to increase the cash flow. But hear me out. This is a good thing if you own real estate and you are an investor. I am actually happy about hitting the 50-year mortgage, not because I think I'm going to use it, but because I think it's going to lead to more appreciation. Think about it. You're making mortgages easier for people to qualify into, more first-time home buyers, more investors entering the market because they can qualify easier, the debt to income and all that. So we're going to lead to more price appreciation.
Right.
Bad news in the long run if you're a first-time home buyer that thinks this is going to make things easier for you. I don't think this is the silver bullet that Trump's speaking to. It's a short-term boon for a long-term, honestly, more on affordability.
Wait, this might be economics 101, and I might be just an idiot. When more transactions happen in a calendar year, do we by percentage appreciate more?
Yes. Like 2020, 2021 had way more transactions.
Right. That makes sense because it's just people bidding the prices up constantly because it creates competition. So more people enter the marketplace.
It's
get
like
off the
lowering
sidelines.
rates. It's similar to lowering rates is what this will do.
Right. So it's like, we're not going to give you a 5% interest rate. However, we're going to give you 20 more years to pay us back.
I think all of us would rather just lower the interest rates. That's better for everyone's interest.
Except for the Fed.
Except for, well, yeah, the Federal Reserve's trying to maintain inflation, yada, yada. But I honestly would rather see interest rates get in the mid fives than a 50-year mortgage.
Right.
This is like a roundabout way to getting to affordability that I think is probably short-sighted, but it's probably going to happen. If Trump doesn't do it, there's going to be another president that does do it. So it's inevitable. I'd rather use it as a tool in the arsenal versus being scared of it. Oh,
right. It's just opening up the toolbox and seeing what we have. We went to chat before recording this episode, all hail chat. It's got all the information that we need in the world to survive. And it did lay out an interesting strategy. It said, get the 50-year, so you qualify, rates come down, refi it into a 30. That I get.
Right.
That's similar to get the 30 now, refi later, and then access a HELOC because you have principal pay down.
Right.
And when you get that line of credit, you can then expand and your.
It's similar in commercial real estate. Like when you buy this new development project, you're interest only for like the first 2 or 3 years because it's like easier, but you're not principal paying down anything because you don't have the rents coming in because you're like renovating.
Right.
It's a very similar concept.
Yeah. It's like the first 2 years of ownership, you get a little bit of a free runway to be able to live and maybe fix the property up with.
Right.
Because I mean, $150 a month, you could do some damage with DIY projects to really appreciate the property.
That's meaningful.
Yeah, it is.
Right? Like our investors, like that is the margin they're not getting and that's holding them back. They're like, I can't get a property manager because that 150.
Right.
Well, now I guess you can pay for your property manager, but
now there's less
your second best profit center in the deal is now pretty much gone until you refinance into it.
Yeah, but who cares if it's sitting in my mortgage or sitting in my bank account?
Yeah, that's fair.
I could just go buy more properties.
You're still going to get the appreciation. So it's like, it increases the leverage. So if you're investing for appreciation, hey, 50-year mortgage, not a bad move. Let's see what Brandon Turner has to say about it. He likes leverage, so.
Yeah, I just want to see what happens whenever we get leverage on top of this 50-year mortgage on top of more leverage in private equity.
Oh, yeah. It's not. We can thank the Fed for printing trillions of dollars for getting us into this one, but that's a topic for another day.
Yeah, I'm going to go back to buying bonds. Peace.
Peace.